because that is the number one currency. And if you look here at the daily chart, you can see that our buying point from last week is the 101.82. This was our buying point from last week. So if it got above here, if you were short, you should have closed your trade at 101.82, and then if you would have flipped it to the upside, it went all the way to 102.16. Now here is the point. This will make our trade very easy. Why? Because a trade below the 101.82, this is going to be our selling point. So based upon this, we are going to take the long, but we're very cautious, very careful, because this looks like an easy trade. And we are going to take the short immediately when it trades below the 101.82. On the buy side, we closed at 102.16. The high of the day is 102.24. So basically we are only 6 ticks from the high, and two things doesn't make me comfortable. One, it's closing pretty much near the high. Two, when it broke up above the 101.82, all what was able to muster, all what it could actually buy, was about 25 or 30 pips from 180, from 82 to 216. So you're looking at 16 and 16, about 32 pips, which doesn't indicate to me that this is really a short covering rally. Okay, if that happened coming after a 5-day lows, I should be looking at this thing going up maybe 100 pips. I'm not, I mean, it's just, and I have to be careful, and you and I have to be careful. So based upon that, we're going to buy it above 102.24, and if it does go above 102.24, we want it to stay above 102.24. So with that, we're gonna set our radar screen. We're going to buy it above, these are the numbers from last week. So we're gonna put the long here, 102.24. Our structure long point will remain the same, and this was our selling point from last week, the 101.82. You had over 180 pips that declined from last week. You had at least 180 pips from the 101.82. So right now it is still our short point, it is still our structure point, and it is going to be our short. And if I buy above 102.24, my next structure point to the upside is the 102.57, and I'm going to use the 102.20 here as my stop. So I'm going to use the 102.20 as my long stop. Okay, so basically our bias is to the upside. We're going to buy the Aussie if it trades above 102.24, and if it does, I have a structure point right above it at 102.57, and if it trades above the 102.24, it should go all the way and take out the 102.27, 102.57. And if I do buy it, I'm going to place my stop about 20 pips away at 102.02, about 20 pips away. On the short side, I will only take it below the 101.82, and that is going to be my structure short point, and it is going to be my stop. And you can see, I'll show you what happened when it took below the 101.82. There is your 101.82 right here, and once it broke it right there, 101.80 right there, this is where it broke it. And once that declined, it took you all the way down You had a pretty decent move over 1,000 pips. Unfortunately, it happened in Tokyo, but c'est la vie, that's life. But that is the move that you had on a break of the 101.80. It took you all the way to 105, so it's about 130, 140 points. Okay, so that's what we're going to look at the Aussie dollar. We're going to take it on a trade above the high, and if it does, we're going to place our stops below the 102.02. All right, that is the Aussie dollar.